Welcome to another session of Tax Life. Today's topic, avoiding IRS penalties, proactive versus reactive. Now, let me ask you a question. Have you ever had to pay an IRS tax penalty? If you said yes, you're not alone, all right? Every year, I have clients coming into my office that are tax filing clients, and they come in and they have letters, and I have to personally help them with their IRS penalties. Okay. Now, here's the thing: tax penalties, they usually don't come as a result of mistakes on the tax return or miscalculations or errors of some sort, actually. Okay. They're actually typically about how much time, attention, effort, energy you spend on your tax life. All right. Taxpayers that are tax filers, they do things like miss payments, they miss deadlines, they miss planning of all sorts. And what's worse, sometimes they even miss opening letters that come directly from the IRS. Okay. Now, here's something I need you to know right away. And I need you to lean in on this one, if you will. IRS tax penalties, they don't have to be, they're optional. All right. You don't have to pay them if you approach your taxes in the right way. Okay. It always it always comes down to one question. Are you being reactive in your tax life or are you being proactive? All right. My name is Jeffrey White. I'm a tax and business strategist, and every day I help taxpayers avoid overpaying the IRS by replacing their tax filing stress with tax planning strategy. All right. In this session, I am going to unpack a topic that trips up so many hardworking taxpayers every year, IRS penalties, and then I'm also going to show you how to avoid them. All right. Now, these IRS penalties, they are not always little nuisance fees. Okay. In actuality, they can add up to hundreds and even thousands of dollars over time. And in some cases, what's worse is when they start adding up, you could feel like maybe I'll never be able to catch up with all of these penalties and interest and fees. All right. So today, I want you to do me a favor. All right. I want you to be totally honest with yourself and clear about the next question that I'm going to ask you. All right. Are you operating your tax life in a reactive mode? You know what I mean? Um, Always late, you're missing deadlines, you're putting out fires, um, you're waiting to the last minute, or are you operating as a proactive taxpayer? Always ahead of the game, avoiding penalties altogether. Let me tell you what I mean by reactive. Let me give you an example. A reactive taxpayer waits till April 15th to see what's going on with their taxes. They often come in with a whole bunch of loose papers or unorganized, and they're wondering, will I get a refund? Will I owe? If I owe, how much will I owe? Okay. And I see these type of tax filers every year in my office, and especially when they receive letters from the IRS. All right. And the letters usually say that they owe hundreds and sometimes even thousands of dollars. But here's the thing: it's not hundreds of thousands of dollars of more taxes, it's hundreds and even thousands of dollars in tax penalties. But why? Well, some cases they just forgot to change their W 4 withholding at work, or they changed jobs and didn't make the adjustment on their withholding, or if they had a business, they didn't make their estimated tax payments either on time or altogether. Or what's worse, they just filed their taxes late. All right. One thing I find out every year is that taxpayers who are reactive, if they get letters from the IRS, they don't even like to open them. And then they come and they finally open the letters, and then it's a threatening letter threatening to garnish their wages or freeze their bank account. All right. That's what being a reactive taxpayer looks like. When you're reactive, what happens is the IRS actually ends up becoming your bill collector. It's really, really stressful. It can be expensive, but I'm here to tell you it's unnecessary. All right. Now, let's flip and look at the opposite side, the opposite way, the proactive taxpayer. All right. Proactive taxpayer treats planning like a person might treat preventive medicine. All right. And think about it this way: a proactive person, they don't wait until they're really sick to go to the doctor. Okay, they have regular checkups. They work on their health all year long. If they're prescribed medicine, they take the medicines so they can stay healthy and be in shape. Okay, your taxes should work really the same way. And I know this is possible because I have tax planning clients who do this really, really well. Every year they come in, and rain or shine, we sit once a quarter and we set their money aside to pay their business estimated taxes. They don't wait until April to sit down with me, and they check in with me uh, sometimes even monthly. Okay, they look ahead. They don't wait till the last minute. They adjust their withholdings when they have life changes and life situations, and they plan out their deductions before December. All right. So come tax season, there are no penalties, there are no surprises, no IRS letters, no panic. They're calm and cool, and they're in control. Okay. That's the power of being a proactive taxpayer. So here's the good news. Every tax penalty has a tax prevention strategy. All right. And there's a recipe for avoiding IRS penalties altogether. And that recipe starts with a mindset shift from being reactive to becoming proactive. Now, I know when I say mindset shift, that may cause you to wonder, well, what does that actually mean? What does that actually mean? Well, when when you decide, okay, when you make a decision, that's an intentional thing. And you change your intentions from being reactive and putting out fires to being proactive and planning. So I want to give you some proactive things that you can do, 10 actions that you can take to start the mindset shift from reactive to proactive. All right. And you can take these actions right away to start creating new habits in your tax life. All right. Number one, file on time, or at least file an extension. Okay. If you have to make the April 15th deadline, do so. If you can't make it, get to the October 15th extension, but file an extension. And even if you can't pay your taxes when you file on time. File anyway. All right. Number two, pay your taxes on time, even if you partially pay the tax that you owe. Okay. So the IRS charges a separate late payment penalty for paying late. So even if you partially pay, that portion that you pay starts to bring your balance down lower, which means the penalties will be assessed at a lower amount, and then the interest will be less because you have a lower balance. And then you start working on paying that balance, but pay something when you start to pay your taxes. All right. Number three, use what is called the safe harbor rule. All right. And this is for businesses that pay estimated taxes. All right. If you pay at least 100% of what your tax liability was in the previous year, you'll be fine in most cases. And if you make over $150,000 in profit, then you want to pay 110% of what your tax liability was in the previous year. Okay. And when you do this and you pay the estimated taxes, you automatically start to protect yourself from underpayment penalties. All right. Number four, you got to make your quarterly estimated tax payments, especially if you're self-employed. Okay. If you're a business owner, a freelancer, or if you have significant amounts of untaxed income, make those quarterly payments April, June, September, and January. And this will help you to avoid the underpayment penalties, underpayment of taxes that the government is expecting you to pay because your business is making money throughout the year. Number five, okay? Please, please, please adjust your W-4 withholdings. Folks, it's easier than you think to do that. In most cases, you can just go to your human resources. In a lot of cases, you'll have a portal that you can go to on your own 24/7 in a lot of businesses cases, and you can adjust your withholdings. And you want to adjust your withholdings whenever you get a raise or whenever you're going to get a bonus or you change household situations. Maybe there's a new member in the household, okay? But you want to make sure you adjust your W-4 withholdings whenever needed. And if you need help, you consult a professional, okay? But this prevents under withholding, which then makes your tax less. And then if you are penalized for some reason, then the penalties will be less as well. All right. Number six, seek professional tax strategy. Okay. And this shows proactivity. Okay. The biggest penalty is the trap of being reactive. Okay. Let me say that again. The biggest penalty trap is being reactive. All right. And so if you got somebody that's a tax professional, preferably a tax strategist, they can help you do things like forecast your taxes, adjust your withholdings periodically, okay? Integrate the planning of your taxes using AI tools, okay? And they could also help you to avoid penalties altogether because of the strategies that they can provide you with throughout the year, all right? Number seven is another action that you can take. Set up an installment agreement quickly, okay? If you know that you owe taxes because you filed your taxes and you have a balance due, okay? Even if you can't pay it in full, apply for an IRS installment plan right away, okay? Immediately, okay? The sooner you act, and start making payments, even when you make the installment agreement, you can make an initial payment, but as soon as you make that payment, you start to reduce your balance due, which reduces your penalties and interest that you pay over time, and it shows proactivity to the IRS. All right. Number eight, I'm sorry. Respond to IRS notices promptly. All right. What I find in my practices over the 30 plus years is that um, taxpayers, they'll get a notice from the IRS, they'll see it's a notice from the IRS, and then they'll just let it sit for a while. And trust me, IRS doesn't just send you one notice and then you should automatically um, be alarmed. Usually the first notice is a notice that is going to be asking questions and wants to review some of the data that you provided the IRS with what data they have. All right. So ignoring the letters that you get, and there'll be multiple letters on the same uh, issue in that tax year, ignoring those letters only escalates the penalties that are a result if the IRS letters result in either owing more money or having to account for a document that wasn't in the original tax return, which caused you to have a balance due or go up. Respond quickly, resolve the issue, go see a tax professional to help you. And if you can't pay in full, communicate with the IRS quickly through the installment agreement. Okay. Number nine, keep accurate and organized records. Okay, and this is something I'm a stickler for. This is about making sure that you don't have sloppy or missing records, because these things lead to mistakes. They lead to missed deductions. They lead to IRS penalties if an error because of poor paperwork inflates the tax that you have due. Okay, good record keeping equals penalty prevention. Okay, and finally, number 10, use direct deposit and e-filing. Okay, IRS is pushing e-filing. I mean, there's probably in the 80 percentile of all Americans file taxes e-file. It's probably even higher than that, but the IRS is pushing for that. And IRS wants e-filing because e-filing reduces errors. It ensures that the IRS is going to get your documents and your tax returns on time. And when you have direct deposit, it also speeds up getting your refunds and minimizes lost or delayed checks. Okay. Now, doing these 10 proactive things and taking these 10 proactive action steps, and you do them on a continual basis and you build up the good habits that change your mindset, you're going to eliminate 90% of the tax penalty risk. Okay? Now, here's the truth: the IRS rewards proactivity, they penalize reactivity. Straight up. But you don't really need to minimize the tax code, okay, to avoid paying tax penalties. What you do need is a simple, proven, proactive system for managing your tax life. All right. So why does this matter at all, right? I mean, some people might think, okay, it's just some penalties. What's the big deal, Jeffrey? Well, in my mind and in the tax life system, it's really not about the penalties. Is much bigger than that. Okay, and it's even much bigger in a lot of cases um, with saving money on the tax penalties. What it's really about, folks, is really about a mindset shift. Okay, as a taxpayer, right? That's what tax life is all about. Okay, we're on a mission to get what we call tax filers, who are reactive taxpayers, to change their mindset and create proactive habits and become a proactive tax planner. All right. Yeah. When you live your tax life reactively, you're gonna always be scrambling. You're gonna always be stressed. You're gonna always have this gnawing thought in your mind that IRS is out there to come and get me, or my balance is building up these penalties, and then interest is accruing as well. Okay. When you live a tax life, basically you live a life of transformation, okay? And you're transforming your mind from reactive to proactive thinking, all right? You're changing your mindset from stress to calmness. You want to go from being a tax filer all the way to a tax planner. You want to change from anxiety to clarity, okay? You want to change from paying those penalties, okay, to avoiding them altogether. So you got to start thinking of IRS tax penalties as a way of the IRS basically telling you that you weren't ready, okay? Your mind's not in the right place, and that's why you get the penalties. But you can't choose a different story, all right? So I'm going to tell you a timeless truth, and I want you to remember it, all right? This is called the penalty principle. All right. Now, the penalty principle says that penalties really aren't taxes. And I need you to know that, because sometimes penalties are referred to as additional taxes, but they're not. They're separate from taxes. What they are, they're the price that you pay for being unprepared. Okay. And so, like I said earlier, tax penalties are optional, and they only really exist when you are living a reactive tax life instead of proactive. Okay. And your mind isn't set on doing things in a way that prevents penalties, okay? But you got to lock this into your mind, all right? That penalties aren't taxes, and they're just a result of the wrong mindset. And if you live by the penalty principle, okay, you're going to never see IRS tax penalties the same way again, and you can't avoid them, okay? Now, this is where I get excited because when transformation takes place, and in particular, when you try to make a transformation in your tax life, um, it can actually sometimes be overwhelming. There's a lot of paper and paperwork that gets involved. There's spreadsheets. There's folders and hoping that nothing slips through the cracks and making sure you got all your documents. But the beautiful thing is that AI has changed that. All right, and AI provides you now with tools like QuickBooks with AI or Keeper Tax or for freelancers or Intuit Assist for doing your books. There are even chat GPT that have special focused on tax and tax topics and living a tax life that can help you track your finances, your income in real time, can help you track your expenses, underpayments, remind you of deadlines, and it can actually even give you a forecast of what your tax balance due might be even before the IRS knows, okay? That's really cool. And that's why living a tax life, it's not just about strategy, okay? It really is about the transformation. It's about looking forward, not backwards. And the AI doesn't replace the wisdom or the strategy that planning provides. It just gives you an enhancement of these tools, okay? So when you combine tax strategy, proactive planning with AI powered tools, you're going to keep more money in your pocket, you're going to lower your stress, and you're going to probably, if you create these right habits, eliminate penalties before they even show up. All right. So this is what I want you to do. Okay. This is the bottom line. Avoid IRS penalties by determining, are you being reactive or proactive in your tax life, and then making a decision and becoming intentional about changing from being reactive to proactive. Okay. Most taxpayers, they don't need more forms in their tax life. What they need is just a strategy. Okay. If you're tired of playing around and you want to make some changes in your tax life, hey, give us a call, confidential call, and we'll put together a specific plan that will penalty proof you. Okay. Remember this, penalties are optional. All right. You don't have to keep paying them. Okay. You can choose proactivity over reactivity. You can choose clarity. You can choose confidence. Okay. Tax filing is legal. It's compliant. It's doing what we're asked to do by our government. But tax planning is transformational. Okay. And it starts with a change of mindset and an intentional decision to go from a tax filer to a tax planner. And it takes time, and it takes good habits, and it also takes inspiration and coaching and motivation. All right. So let's live the tax life together. I appreciate you coming. I appreciate you seeing here tonight. All right. God bless. And as always, I want to ask you, what's your dream?